Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Scott, we had Keisha Landrum Pierre on today and Emmeline Ventures. And I love that she defines, and you're going to hear it, she defines what that means. And that means that you're working, you're brave, you're diligent, you're like all of those things. That has a definition for what that means. And I was really fascinated by her. So I cannot wait for us to share this interview.
Yeah, she was a great interviewer. She's obviously very passionate about her mission. And her mission is not just investing in female founders, but empowering them and engaging with them and supporting them. And then, in a male-dominated industry, to find someone like her that is so passionate and so aggressive, it's really refreshing to see.
Yeah, and I love that she called her, the way she works, power moves. That is just, well, so Taylor Swift, but just so, I mean, it's so true. This is what she's doing, is she's making these power moves and looking at this, at the market and the underfunding of female ventures and even products and solutions that are going into, which is not an emerging market at all. I mean, female spending is off the chart. So there's no way you can call that a niche.
Right. She made a couple of interesting analogies. One, obviously, was about, the investment in females, but also in the vertical she's investing in. She's bringing to light, medical issues for women that aren't getting properly financed and aren't even getting properly recognized, which I thought was phenomenal.
Absolutely. Well, she is one of the most passionate and purpose-driven leaders I've heard from in a long time. And she has this great experience building operation teams around the globe. So she brings this complex business challenge, actionable solutions, operating excellence, all to it. Plus, she has a background in media. She started the Sahara Reporters Media Group. I mean, that is just a powerhouse in that area of early stage digital content consumption that was just going on way before anyone else was looking at that. So her focus now is health, wealth, clean food in Emmeline Ventures with her partners there. Let's hear from Keisha.
Well, hello, everybody. My name is Scott Kelly. I am the founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm excited to have Keisha from Emmeline Ventures. Welcome to the show today.
Thank you, Scott. I'm thrilled to be here.
Awesome. Well, why don't you share a little bit about, before we talk about your fund and your thesis and such, tell us a little about your background prior to that.
Yeah. So I would say I didn't grow up seeing venture capital, but I grew up seeing power moves, right? So my family's very entrepreneurial. My aunt, actually my great aunt, was an early real estate millionaire and invested in real estate here in Los Angeles. And then my aunt built her own real estate brokerage firm. So I was a little girl pushing paper, if you will. And she would take me on rides with her as she's, closing deals, et cetera. And then I actually got my license and hung it under her. And I was, I think, 18 years old, which is at the time you had to be 18 to get a license. And so got a license. And was really watching her do these really awesome, power moves, flipping buildings, rolling my mom into deals and that's me into deals. And I learned how wealth gets made, right? Not just earned. And I often say also that my world was global before I had a passport. As I grew up in Orange County, California, because I know there is an Orange County in Florida, Scott. But I grew up in the OC. And my parents taught me really that the person next door was just as much my neighbor as someone in Nairobi or in Paris, right? And that expanded my lens, and that never left me. So I, with a really, really brilliant gentleman named Omoyele Sowore, together we built something called Sahara Reporters Media. So we had this vision, right, Scott? And a lot of what happens in startup world is you have to see a world that doesn't exist, that no one else really believes is possible, and you build for that. And that's what we did, Scott. We built for a world where consumption of content would be exclusively digital. Today, that seems so basic, but then it was pretty controversial because this was over 12 years ago. And so we built for that. We built a digital media platform with an ad tech underbelly that grew to become one of the largest in the market that we played in. And so I often say media taught me skill, but civic tech taught me purpose and venture taught me leverage, right? And so when I ran Sahara Reporters, a lot of that experience, Scott, was learning how to scale a business from 2 million to over 50 million monthly uniques. Running Sahara really showed me how to scale a business, Scott. So it was from 2 million to 50 million uniques. That was really great, but really it was actually civic tech that taught me purpose. So while I was at Sahara, I really proved out this sort of intersectionality between impact and profitability. We were backed by Pierre Of Emmeline, founder of eBay, and he really also believed that you could have that intersectionality between impact and profitability, and that's what we set out to prove. And I often say starting all of that experience really led me to wanting to start a venture firm, but not quite having the lingo yet, right, Scott? So we were venture backed, but I oftentimes said, okay, if I could add additional perspective to who's writing checks, I bet I could have raised many more millions to build faster Sahara. And so that for me said, okay, VC showed me how to turn that idea into energy and to really accelerate it. And so I often said, I want to be in that seat. And Sahara is what really enabled me to be in that seat. And founding Emmeline was like my post-pandemic permission slip, if you will. I knew I could do more than just write checks. I wanted to architect outcomes. That was really a big thing for me, Scott, right? I saw how having a vision for the future of what digital and media consumption could look like, building for that, how I could really architect outcomes and how people consume information and what that experience is like and build this world, right? Sahara was a world just like WhatsApp is a world and just like, all of these different platforms are world. And then I would say that me and my two co-founders, we started something called NLA. So it was just the three of our initials. And we start with 14 deals and one goal, back women brilliantly, like really get behind them. And so that pilot fund became our launch pad, Scott. And it wasn't for us just a launch pad. It was kind of like a proof that our thesis that we were onto something. And that was a precursor to what is now Emmeline Ventures.
That's awesome. Yeah, I find a lot of times, in the venture capitalist journey, they start with the idea and the thesis before they have the capital, and then their small group is their MVP of their fund. And I love how you did that. So let's dive in a little bit more about the fund itself. Talk a little bit more about the fund's thesis, how you're investing, where you're investing, and the examples of some of the founders that you're investing in.
Great. I'm going to try to go as fast as possible, but
Take your time.
yeah. So these are things that we know, right? So women are really driving 85% of consumer decisions.
Mhm.
In my household, it's more like 95% of consumer decisions. And so these are kind of stats that we already know. But we're really building the infrastructure. I think there's another stat too that's really interesting, Scott, that I think you may hear. But there's a big generational shift that's happening in a major shift of capital, and capital is shifting from one generation to the next. And it's more than just capital that's being shifted, right? And that's being shifted from one generation to the next, but it's values, right? It's what does this next group, this next generation have in mind when they are shaping the future? And another interesting stat is of that sort of $80 trillion, that's the generational transfer, 30 trillion of that is going to be managed by women. And that stat is really interesting because that is going to allow the unlock of certain innovations that have really sat dormant, Scott. So if you think of innovations in women's health, there are certain things that perhaps a lot of folks say, wait, we're still in the 30s when it comes to innovation in certain spaces. Well, half of that just has to do with the capital and how much capital is going into in certain spaces and certain innovations.
Mhm.
And so now there's going to be a major shift where the capital will go into innovation in women's health. So similarly to what I shared with you, Scott, about how we approach things by saying, hey, 10 years out, this is what the future is going to look like. I'm doing the same thing here in venture. 10 years from now, we're investing in the household names that we believe will exist 10 years from now.
Mhm.
We're investing in sort of innovation in women's health, wealth, and what we call cleaner, safer world, which is sustainability, it's climate, it's ag tech, it's clean food, food tech. And so we're investing in the things that we believe 10 years from now they're just ripe for the moment, right? And then we're powering them with both the energy that we have and our resources and then the capital so that they can actually get to market. One of the companies that we're really excited about is healthcare AI company. So it's a healthcare AI platform that essentially is the small. It takes it creates the small language models for the larger language models around women's health. And so if you pop a question into most AI models when it comes to women's health, the data is dirty, if you will. So the outcomes are therefore not going to be what's helpful to a user. And so this is going to change with the tech behind Emma AI. So those are the kinds of things that we're investing in. And I often say we often say our energy is our moat. We were going to call ourselves, Scott, First Call Capital, because with our founders, we're oftentimes their first call. They're like, not quite ready to go to all the VCs, but we do want to share this with you because we need to help thinking this through. And one of the big things that you'll find, Scott, is with any VCs, with any strategy of any firm, you have to understand what your founder needs to succeed. So for us and the type of founders that we invest in, they really need that wrap around support around how to scale a business. A lot of these founders are coming into women's health and saying, here's a need, but they don't necessarily come with the experience of being a three-time, four-time, five-time exited founder, right?
Right.
Right. So we're bringing in, like, so I'm an exited founders, right? So we bring in the exited founders and we bring in the wrap around that gives them the intel. It's like, yes, this is great that you're building a solution that needs to be built. You've got the tech. Like some of our founders are really brilliant doctors and have this really great domain expertise. We really fill out their bench to make sure that they can get from that pre-seed or seed stage past Series A.
I love what you said about not just the generational transfer of wealth, but the generational transfer of values.
Yeah.
Because the values, I'm 61, the values of my generation are vastly different than my 26-year-old and my 19-year-old.
That's right.
It's really great that you add that perspective because as value changes, products change and investment decisions change.
Investment
And
decision.
so I thought that was really a good salient point because you do have this massive transfer of wealth, but they're not going to be buying the same names and the same brands and the same investments that, their parents did.
And you're already starting to see
that concept. So let's shout out a couple of companies. You mentioned one, but let's shout out some of the
Yeah,
success.
Emma AI, we're super excited about. We're leading her round. Amanda's brilliant, super smart. Same with Noelle. So Noelle is the founder of Lovu Health, which I encourage everyone to look up. I would shout out Noelle, I would shout out Amanda, and I would shout out Wealthmore. So Wealthmore as well, started by McCall. McCall is another brilliant founder. She is building for, how do I say this quickly? So the way to think about it is I and likely you, Scott, and your peers and my peers are in a position to work with a private wealth advisor. Oftentimes the threshold, though, is $1 million or above. So if you are not able to get that sort of wealth building access to that information, you do not know how to grow and build wealth. And so what she's doing, she was an MD at JP Morgan, and essentially took all of those aha moments that she had. She's like, oh, there's a whole swath. And at Harvard Business School, I think the name of this class is called Bebop, Business at the Base of the Pyramid. So she's saying there's a whole business here that we can leverage AI, we can leverage the fact that this can be digitized, and we can bring that type of intel to this pyramid, this massive market that's just and they're not even getting this intel and underserved. And so that's what she's built. She's built a platform, and we also led her around. Really proud of that. And I would say another company we're really excited about, Luna Joy. I would say Luna Joy. We're really, really thrilled about Luna Joy. I'll tell you about Luna Joy because Luna Joy just recently had another successful raise. Part of the reason I'm pausing, Scott, is some of this is intel I can share, and other I know I can't. I know, but I'm not quite able to share. So, but Luna Joy is kind of it's a mental health platform, right, for women. So it's going after the $26 billion maternal and women's mental health market with precision, with empathy, and they just recently got another set of backing from YC after YC already came into the deal with really, really attractive terms, which YC rarely does that. And so we're really, really proud of their traction and of the ARR that they're hitting. Another one of the founders, I won't say which one because this has not been announced yet, but in a market, Scott, where it's really, really difficult right now to raise, right? We already know the capital is constrained. We're not even talking about what's happening in the markets right now. And this founder managed to get 80% of her round anchored by a very, very prominent healthcare backer. And she just has a couple, like 20% more to fill. They said, we will cover the entire round. And this happened a week ago. I was just so proud of this founder because I'm saying so many folks are coming to the market. And so many of the founders that are coming to market right now are essentially saying, like, I need to raise a bridge round, a seed extension, or everyone's trying to just extend their runway. Meanwhile, she got approached with capital that she wasn't even seeking.
That's phenomenal. So, fund specifics. So, what stages do you invest in? What's your average check size?
Yeah, so we're investing at early stage. It's funny, Scott, we often say we invested in pre-seed and seed. We don't say that because people are like, what does that even mean? When
Right.
is it pre-seed? When is it seed? So for us, we really are saying what we like to see in founders is more than an idea. We want to see you've taken the time to explore, is there some demand for what you're building, right? We want to see some traction. We know that, but we're still early stage. So we just want to see early traction. We want to see some type of MVP, even though obviously it's not perfected. We do want to see that. Whereas before, I think there was more of an appetite, Scott, to invest much earlier on. That for us,
Mhm.
and a lot of the early stage kind of niche VCs are not doing much of that. And then our check sizes are about 250K to $500,000. That's the case to date. And then obviously we've had smaller checks as well, but that's about
That's
uh
awesome.
the size
So
of it.
let's talk to because the audience of this podcast is obviously entrepreneurs, but another big swath of our listeners are LPs, potential
Yep.
LPs, RIAs that manage
Yep.
alternative investments for their clients. So for those people, why? And you alluded to this a little bit with the 10-year time horizon, but why your fund and why now?
Yeah, I think the question about why now is really, really important. It's something I've been talking about with a lot of VC peers. So you're just seeing a lot of volatility in the markets right now. You're seeing a lot of volatility globally, and you want to put your capital in a position that can weather, right? That's playing a much longer game, right? And so for us in venture and in alternatives, we're playing a much longer game, right? So what we often say is regardless of what's happening today, $30 trillion of capital is going to still sit in the hands of women. There are going to be fundamental changes in consumer behavior. These are the things that are going to happen regardless. And that is what we're investing towards. And that's what we're investing for. That's what our investment strategy, research, and data is pointing to. And also the research and data that we have internally with our diligence team and our research teams. So because that investment strategy does not shift and does not change regardless of the volatility that we're seeing in the market. And that's the kind of stability that you want to invest in now. So that's what I would say, like one reason. And then we target the largest untapped market in the global economy, right? And so that's where we're playing and that's where we're targeting. I think we already know that what I shared with you, but we are investing in, women not only as a segment, but as the engine that hasn't received the capital and that will be driving kind of where these consumer decisions are going. So that's the correction that we see coming, and that's what we're investing to. So I think that's a big, big, big thing to consider. And then a lot of what we're seeing play out is you're seeing a lot of companies fold. PitchBook has the data. I don't need to,
Hmm.
quote it, Scott, but it's just a difficult market for startups. Our portfolio is outperforming in that sense, right? So we have only had there we have 14 we've only had 2 companies fold. Most of our peer VCs are it's becoming like a startup cemetery. And so part of the reason for that is because how we're investing, but also the data that points to how sort of this women-led innovation, how
Hmm.
they're oftentimes, Scott, criticized for being capital efficient. We need you to be capital efficient. They're focusing more on profitability than scale. They're focusing on scale, but they're also thinking a lot about profitability. Those things are really, really attractive when you're looking at investments that can be protected during a season of volatility.
Yeah, I'm glad you made that comment because the reason again why I said this podcast is that you've got thousands of venture capital funds. A small amount of allocation is going to some of the mega funds that are out there, but the alpha and the returns are far better in these smaller emerging funds, and that
Right.
I'm glad you made that point. Talk about your you don't have to mention names, but talk to me about the profile of your LPs now and the profile of future LPs.
Yeah, so we have a lot of really, really well-respected family offices in our
Mhm.
LP base, that we're really proud of. We also have it's funny, Scott, that you asked this question because we just had someone ask, I was just lecturing at USC the other night, and one of the students asked me this very specific question, which is, how do you find LPs for the kind of strategy that you have? And so what we have found is that senior executives in the sectors that we invest in, right? So we have very, very accomplished senior executives in healthcare, senior executives who see that, yes, this is absolutely a space that's going to take off. We know we don't have the time to go invest. And, so that has been a big part of our base as well. And then we have also senior execs in what we call like a finance. So we have a lot of like BlackRock representation, LP base that's, top law firms in VC, right? So I think because our strategy is to your point, it's not quite what the mega funds are doing. It makes it much more attractive, I think. And so we have
Right.
found a lot of like VC players. I just don't want to name the law firms, but a lot of big VC law firms.
I understand. I appreciate that. So,
Yeah.
what are some final things you want to share with the listeners today? Anything else you want to close with, or advice, or you want to give?
Yeah, I think what's really important is firms like Emmeline, right? What we're building, it's more than really a portfolio, right? We are building a portfolio. We're building a top tier portfolio, but it's also like an economic reframe, and we see that this economic reframe is happening before us, Scott. And you've got to find the firms that understand that and are really doubling down on that. You really want a firm that has that sort of concentrated perspective and concentrated expertise to really knock it out of the park. And that's what we're doing. We see that economic reframe happening. And then I think the other thing, given that we are investing in women's health, I think a lot of folks often thought of it as an emerging category. And I mean, with over 1.4 billion in capital going to it and a 23% increase year over year in capital going into that space, I think that's not an emerging category. I think it's an emergent, really necessity, right? And so,
Absolutely.
and with Emily, we're positioning ourselves and our LPs really to be at the leading edge, right, of that innovation.
Fantastic. Keisha, where can people find more about Emmeline Ventures and yourself?
So I oftentimes say my happy place is LinkedIn, Scott. I don't know where your happy place is, but LinkedIn is easily just ping me on LinkedIn, but Lakeisha at emmelineventures.vc. And then on emmelineventures.vc, which is our website, we have like a pitch us or meet us. And then I directly get those emails. So would
Fantastic.
love to hear more from anyone. Thanks, Scott. Really appreciate that.
Fantastic. Keisha, thanks for being on the show. And for all you joining in, make sure you subscribe, follow, and share. And again, Keisha, thanks for being on our show today.
Thanks for having me, Scott.
The stats on the outperformance of her fund, Scott, astounded me.
Yeah.
35% return on investment of outperformance.
And that says a lot about two things. One, it says a lot about her ability to pick winners. And more importantly, it speaks a lot about how women entrepreneurs can really be winners in venture.
Yeah, I liked what she said towards the end, too, about how they're really poised to continue to focus on the things that are most important right in here. Consistency, non-volatility, right? And profitability and
Right.
doing more with less capital. That's
Right.
just really powerful.
Yeah, as an operator, she understands, how the struggles of making payroll, the struggles of, making money every month from having an operating business. She understands how to take that business and exit it. So not only does she bring capital, she brings a unique experience and great perspective.
Right. And the market areas she's talking about are not small, right? Like this is like they're not emerging. They're already emerged.
Right.
But they're going to get stronger, and we're going to have a period of time right now with low investment in healthcare, right? The feds are pulling money from that. There's money exiting that. If venture capital is not investing in that area, they're going to be behind when they have to invest coming out of all of
Yeah,
those,
and I love the
down
fact that
periods.
she's leaning. Yeah, I love the fact that she's leaning into, health issues for women because again, they've been around for centuries, millennia, and now there's a real opportunity with AI and other technologies to really create some solutions in this space and in health and in clean food. I think she's really leaning into the right categories, and she's obviously backing some great founders in those categories.
Yeah, and she has this experience in content, in marketing.
Yeah.
So she understands the power of all of that that's necessary to grow both a fund and the founders themselves, right? The ventures that she's invested in. And that really leads to that message and that intersection she was talking about at the beginning of impact and profit. When you
Right.
connect those things together, it's a winner. because who
Absolutely.
doesn't want it? Who
Absolutely.
doesn't want to invest in that? And who doesn't want to buy that?
Right. Exactly. Exactly.
Well, I'm going to have an offline conversation with her. I can't wait. I need to have one because she's right down the road. Well, up the road. She's right up the road from me. And we're both OC girls, which California OC, as she pointed out, right? So we have to get together. And I'm so sad I missed that interview. And I am looking forward to having a talk with her offline. But I look forward to learning more about her. I'm thinking that, Scott, we maybe need to tie in writing an occasional follow-up article. What do you think about that? I mean, I
Absolutely.
think we need to expand our little media group here and go beyond the podcast and the video cast and maybe write some
Yep.
follow-up articles as we follow up on these venture funds as maybe they head into their second. We could go and do some articles. So I'm announcing that on air because I would love for
There you
all of
go.
you out there to tell us if you like that idea.
Absolutely. We're sharing the first couple chapters, but there's plenty more chapters to the book of these emerging managers.
Right, absolutely. So listeners out there, let us know if you'd like us to write some follow-ups in the future about them. I mean, obviously, when they hit something big and something major happens, we'll have them back on again. But we have so many emerging managers to cover, it's really hard to come back to someone. So maybe we need to do that in kind of an offline way.
Absolutely. I agree 100%.
Well, I'm very sure we will be covering Emmeline Ventures again and Keisha Landrum Pierre, because there's just no way that those funds aren't going to go crazy. And some of those, I mean, I saw some of the ventures she's invested in on her website. Wow, like those are much needed.
Absolutely.
Oh, hey, Scott, we got more coming up. Let's keep it coming with these really interesting entrepreneurs tackling
We do.
this.
We got some more wow factor coming very soon. So
All right, everyone stay tuned. Come back. We'll be back next week.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guest next week on the Emerging Managers podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.